Yo, what's going on, boys? Welcome back to another video. Today's trading training, I think day 19, and today is going to be entries part 2. So we're going to be going over liquidity sweep plus break of structure. Let's get right into it. So the first thing that you want to do is determine your buys. So this is yesterday, for example. What do I see? I see a 1 hour inverse fair value gap. We swept out this swing high right here. I'm thinking we're bearish. So I'm going to go down to the 15-minute. And you can see right here, we have a liquidity sweep here. I'm actually going to go back just a little bit more. Go down to the 5 and I'll see exactly when we swept liquidity. So we swept right at 8:30. Alright, so the second we sweep, I wait for a break of structure. What else do I see though? Inverse fair value gap. So I'm waiting to see a close below most recent low. Not yet. There it is. So after seeing this, we have our 15-minute liquidity sweep. We have our break of structure. I'm selling. And I'd probably put my stop loss above these fair value gaps. And put my take profit at, I think it was Asian session lows, all the way over here. We'll put this just a little lower. I'll do above that big fair value gap. Now we pull out our position tool. Put it right where we entered. Stop loss here. I'll bring it actually to the candle. Stop loss here. Take profit there. And what you can do as well, so I'll use the GAN box. I'll go right from where I entered to my take profit. And as soon as we hit halfway to my take profit, I move to break even. But this is bar replay. And what a hit. There's a good example of 15-minute liquidity sweep, 5-minute break of structure, and an inverse fair value gap. Well, actually two inverse fair value gaps, 5-minute break of structure, enter off the break of structure, TP at like a 1 to 2, risk to reward. There you go, right at Asian session lows. Good trade. I didn't take this, but it was a good trade. Good trade. Alright, let's try and find another cheeky example. We've been having some iffy price action, let's just say. But here, for example, what do we have? I think we're bearish, or we're bullish, but that's just the 1 hour. Check on the 4 hour. What do we have? Inverse fair value gap on the 4 hour. Okay. What else do we have? We just swept this liquidity, swap this liquidity. So we could go down, mark out this. So there's a drawn liquidity. Let's scale down to the 15-minute. We'll kind of just wait and see what happens. We do have a liquidity sweep already, right at 8:15. Let's see what happens. Okay. Here, let's go back just a little bit. I'll mark out this high. We swept that high. And we could go on the 5-minute after seeing that sweep. So we got that sweep at exactly 8:15. Okay. We wait for a break of structure. Oh, what's another thing we get? Inverse fair value gap for more confirmation. Not a break of structure yet. Not a break of structure. So this is our most recent low. We're looking to close below that. We just do. Sell. Stop loss. I'm just going to put it above these highs. take profit. Do maybe, no. Do like, let's check the 1 hour, if there's any fair value gaps. I could just do these. Why did it do that, bruh? I hate when it does that. Like, let me switch time frames. Just gonna click sell, stop loss. Let's just do above the inverse fair value gap, because I don't want it to be too high. Could have been over my risk, could have been risking way too much. So we're looking at like 110, well, 111 would be exactly 1 to 2. So we just go for maybe those lows. So I'll go to the 15. Yeah, I like these lows. Can I put it on it? Damn. Let's go back to the 5 minute. Pull out our short position tool. Bam. Let's see what our risk to reward is. There it is. 214. And there it is. And there it is. 214. Risk to reward. Enter off 15-minute liquidity sweep. 5-minute break of structure. And there it is. 2 good examples. Obviously, this isn't going to be a crazy long video. I don't want them to. Anyway. Quick examples. So here, we're going to go over steps. First step, determine your bias on the 1 hour and the 4 hour. Let me get rid of all this shit. Get rid of all my drawings. Where are my candles? Okay. So, first step is determine your bias on the 1 hour and the 4 hour. If you're bullish, you look for 15-minute lows to be swept, and then wait for a break of structure to the upside. If you're bearish from the 1 hour and the 4 hour, you look for 15-minute highs to be swept, then wait for a 5-minute break of structure to the downside. You enter off the break of structure. There we are. This was my strategy for so long. Now I've gotten this strategy in 1 month up to an 80% win rate. Okay? We went over the examples. We went over the steps. What to do. This is our first entry model. Not next video, but the video after next video on entries part 3, we'll be going over, I think it's liquidity sweep, break of structure, fair value gap retracement. And yeah, it's just going to get more confirmation from there. Okay? So hopefully you guys learned something. If you guys have any questions, don't be scared to let me know. I'll gladly answer anything. Hopefully you guys took notes. Something, man. Hopefully you guys learned, man. Honestly. Alright. Oh yeah, my mentorship is now live. You click link in the description if you want to work with me one-on-one or watch me trade live the days that I do trade. It's also in the link in my Instagram bio. And yeah, mentorship is now live. You watch me trade live, or you can get access to work with me one-on-one. So yeah, I'll see you boys in the next video. We will be back off the charts for day 20. I think today's 19. So for day 20, we'll be back off the charts. More psychological stuff, more discipline stuff, because that's just important. So I'll see you boys in the next one. Peace out.